Imagine unlocking the door to financial freedom only to find yourself trapped in a cage of debt and despair. Hold on to your wallet, discover the shocking truth behind these seemingly irresistible deals, and learn how they can trap you in a never-ending cycle of debt and wreak havoc on your finances. Welcome back to our channel. In this video, we're going to discuss the shocking truth about 0% interest offers. But before we dive in, if you haven't already, smash that like button, subscribe to our channel, and hit the notification bell so you never miss another mind-blowing video like this one. 0% interest offers. They sound too good to be true, right? Well, that's because they often are. We see these offers everywhere, on TV, in magazines, and all over the internet. They're usually used to entice us into buying big-ticket items like cars, appliances, or electronics. And let's be honest, it can be pretty tempting. But, my friends, this is where we need to be cautious. As they say, if it sounds too good to be true, it probably is. So let's break down how these offers actually work and why they can be so dangerous to your financial well-being. To understand the risks associated with these offers, we first need to know how they work. When a retailer or lender offers a 0% interest deal, they're essentially giving you a loan without charging any interest on it for a specific period. This interest-free period can range from a few months to several years. For example, let's say you buy a $2,000 TV with a 0% interest offer for 12 months. During that time, you make monthly payments without incurring any additional interest charges. Sounds great, right? But, and this is a big but, there's often a catch. If you don't pay off the entire balance by the end of the promotional period, the lender will hit you with all the deferred interest that accumulated during that time. And trust me, that can add up fast. Let's now talk about why these 0% interest offers are so attractive. I mean, who wouldn't want to make a big purchase without having to worry about interest piling up? It sounds like a dream come true. 0% interest offers can be incredibly alluring for a variety of reasons, and many people find themselves easily attracted to these promotions. Let's dive into some of the key factors that contribute to the appeal of 0% interest offers. First is immediate savings. The prospect of not paying any interest for a specified period is undoubtedly attractive. By taking advantage of a 0% interest offer, people feel they can save a significant amount of money on interest charges, especially if they're making a large purchase or consolidating high-interest debt. Second is the lower monthly payments. Your monthly payments during the promotional period are generally lower than they would be with a traditional loan or credit card. This can make budgeting easier and provide a sense of financial relief, as people feel they have more disposable income to cover other expenses or invest in their savings. Third, greater purchasing power. The allure of 0% interest offers often encourages people to make larger purchases than they would typically consider. Whether it's a new car, expensive electronics, or a major home renovation, 0% interest promotions can give consumers the confidence to spend more, as they believe they can afford the payments without the burden of interest charges. Fourth is the illusion of a free loan. 0% interest offers can create the illusion of a free loan, where people feel as if they're borrowing money without any cost. This perception can lead to a sense of financial freedom, as individuals feel they can make purchases without worrying about the long-term implications of accumulating interest. Fifth, the urgency factor. Many 0% interest offers are marketed as limited-time promotions, which can create a sense of urgency among consumers. This act now or miss out mentality can drive people to make impulsive decisions, as they don't want to miss out on the perceived benefits of the offer. Lastly is a competitive advantage. In a world where consumers are constantly bombarded with various financial offers, 0% interest promotions can stand out as a competitive advantage. People often perceive these deals as a rare opportunity to secure better financing than what's available through traditional channels, which can make them more inclined to act on the offer. While 0% interest offers can be appealing for many reasons, it's crucial to approach them with caution and fully understand the terms and conditions. By carefully evaluating the offer and considering the potential pitfalls, you can make an informed decision about whether or not to take advantage of a 0% interest promotion. Now that we know how these offers work and why we get easily attracted to these types of offers, let's now talk about the hidden dangers that can lead you down a dark path of debt. Danger number 1. Deferred interest. As mentioned earlier, if you don't pay off the balance in full by the end of the promotional period, you'll be on the hook for all the interest that would have been charged during that time. Let's go back to our $2,000 TV example. Say you've only paid off $1,500 of the balance by the end of the 12-month promotional period. You might think you'll only be charged interest on the remaining $500, right? Wrong. Instead, you'll be charged interest on the entire $2,000 purchase price from the very beginning. Depending on the interest rate, this could easily add hundreds of dollars to your remaining balance, and that's just for a single purchase. Danger number 2. High interest rates. Another sneaky thing about these 0% interest offers is that they often come with higher interest rates than traditional loans or credit cards. So, if you don't pay off the balance by the end of the promotional period, you're not just hit with deferred interest, you're hit with an exceptionally high interest rate too. In our example, let's say the interest rate is 25% per annum. That means you'd owe an additional $500 in deferred interest after the promotional period ends. So now your remaining balance jumps from $500 to a whopping $1,000. And that's not even factoring the ongoing interest charges you'll incur on that new, higher balance. Danger number 3. The temptation to overspend. The fact that you don't have to pay any interest for a while can lead to a false sense of security. You might think, hey, I can afford that $2,000 TV now because I won't have to worry about interest for a whole year. But remember, the bill will eventually come due, and when it does, you might be in for a rude awakening. If you're not careful, these 0% interest offers can easily lure you into spending more than you can actually afford, leading to a mountain of debt that becomes increasingly difficult to manage. And finally, danger number 4, a negative impact on your credit score. When you take advantage of these offers, your credit utilization ratio, which is the amount of credit you're using compared to your total available credit, can increase. If your utilization ratio gets too high, it can hurt your credit score, making it more difficult to secure loans or credit in the future. In short, while these 0% interest offers can seem like a great deal up front, they can quickly spiral out of control if you're not careful, leaving you trapped in debt and with a damaged credit score. But don't worry, it's not all doom and gloom. There are ways to protect yourself and make the most of these offers without falling into the debt trap. Here are some tips to help you stay financially savvy. Tip number 1, read the fine print. Make sure you have a thorough understanding of the terms and conditions of the offer before you commit. This means taking the time to read through the fine print and ensuring you grasp the length of the promotional period, the interest rate after the period ends, and any penalties for late or missed payment. To make this process easier, make a list of questions you want to address in the text and skim through it accordingly. Look out for asterisks or superscript text that might indicate the important details or caveats. Tip number 2, create a repayment plan. Figure out how much you need to pay each month to pay off the entire balance by the end of the promotional period. Calculate your monthly payment by dividing the total amount of the number of months in the promotional period. Stick to that plan to avoid deferred interest and high ongoing interest charges. To ensure you follow through with your repayment plan, set up automatic payments and reminders for yourself. Tip number 3, keep track of your spending. Avoid the temptation to overspend by setting a realistic budget and sticking to it. Break down your budget into categories such as groceries, entertainment, and utilities. Remember, just because you're not paying interest for a while doesn't mean you can afford to buy everything you want. Keep a close eye on your expenses by regularly reviewing your bank statements and tracking your spending using budgeting apps or spreadsheets. Tip number 4, prioritize paying off your balance. Focus on paying off the balance of your 0% interest offer before the promotional period ends. If you have other debts with higher interest rates, it might make sense to tackle those first. But don't lose sight of the end date of your 0% interest offer. Make a list of all your debts and their corresponding interest rates and create a plan to tackle them in a way that optimizes your overall interest payments. This might involve the debt avalanche or debt snowball method, depending on your preferences and financial situation. And finally, tip number 5, consider alternatives. If you're not confident that you can pay off the balance within the promotional period, explore other financing options like personal loans or credit cards with lower interest rates. While you may pay off some interest up front, it could save you a lot more money in the long run. Compare various offers from different financial institutions and carefully assess their interest rates, fees, and terms. Consider your current financial situation and future income prospects before making a decision on the best financing option for you. And there you have it, folks, the shocking truth about 0% interest offers and how they can trap you in debt and destroy your finances. But remember, with a little planning and discipline, you can make these offers work for you without falling into the debt trap. I hope you found this video helpful and eye-opening. If you did, don't forget to give it a thumbs up and share it with your friends and family so they can avoid these financial pitfalls too. And as always, hit that subscribe button and the notification bell to stay informed about all things personal finance. Thank you for watching and see you on the next one. Cheers.